as I get older, I have to start being much more conservative. The risk has to be tampered down. And I've been driving this home that risk has entered into the traditional markets of stocks and bonds. And if you're my age, you cannot assume this type of risk. Now, when you see your financial planners, they're going to say, well, you have a portfolio of stocks and bonds. You should be 50-50 stocks so that you get some growth, and bonds so you get some income. So let's just think about that for just 1 second. You and I have been around the block a few times. What happens if we have a major crash in the stock market like what we had in 2008? And you know, in 2008, the Federal Reserve came in and stepped in and stopped the downturn. It never fully completed. And look at how much it lost. It took 10 years to recover. Do you have 10 years to recover? And let's just look at the traditional safety net of bonds that's going to send you this income stream each and every month. You realize that there are trillions and trillions of dollars of corporate debt that are a notch above junk. And we saw this week General Electric was downgraded. And when it was downgraded, not only did the stock drop, but the bonds plunged, devastated. Who would expect General Electric, a 100-year-old company, but they're very similar to Sears, been around a long time. Everybody expects that they're going to be a wonderful company until they're not. So I'm warning you, we've been warning about a global slowdown. That's no longer a warning. That is a fact. Goldman Sachs, Ray Dalio of Bridgewater Investments, the Federal Reserve, the IMF, they're all saying that we're going to have a global slowdown. We've been talking about that for a long time. That's a fact now. The question is not whether we're going to have it, it's how bad it's going to be. So couple that with companies that are a notch above junk. What happens when their revenues start declining? If they get downgraded, they'll lose 20 or 30% overnight. And if you're my age, if you're 70 or 75 years old, it will devastate your portfolio. Now, I'm going to advise you to talk to your financial advisor and say, what's prudent at this juncture of the financial business cycle? How much exposure should I have? I'm not going to tell you to put all your money in real estate, but you know there's a transition going. They were transitioning from the traditional stocks and bonds out into more of real assets, which would be commodities, and of course real estate. And real estate gives you a consistent cash flow even through bad times. You get cash flow because everybody needs a place to live. And I'm expecting a correction, so we're going to get better prices in 9 months or 12 months. But in the meantime, if you need income, this is an avenue. And I think even if it drops a little bit, it's a correction in an ongoing bull market. So I'd like you to call me, call one of my staff. We're here to help you. We're here to do our very best for you. We're fiduciaries. We're here to do whatever we can for you. Information is on the bottom. If I can help in any way, let me know. My best to you. Bye-bye now.